Hello, folks. This is Brandon Chapman with you today. It's March 24th, 2025. It's a Theo video, and market is breaking to the upside. Bitcoin bumps and the market jumps today. The S&P finished up, the SPY up 1.79% on the session. The only thing that outpaced it was industrials and technology as far as leaders today. Generally speaking, the market was higher with the exception of utilities and gold. What does this mean? A lot of people are ascribing a lot of significance to today's move. I heard stuff over the weekend after the futures opened on Sunday. If you're reading stuff on X, people are saying, oh, this is the biggest opening gap since like October of 2022. People getting all excited about what's going on and trying to find ways to statistically prove that this is the beginning of a major move in the S&P 500 to the upside. And I came across this image. I'm going to share it with you right now. But no one likes Mondays. 144% annualized return to the negative on Mondays compared to other days in the week. And this is just for 2025 so far. Why have Mondays been so negative and all of a sudden today it's so positive? It's all about the news cycle, right? We talk tariffs. We talk lots of stuff over the weekend. We have 2 days to kind of digest it. And Monday is either going to gap open or gap higher or gap lower or trade higher or trade lower on Monday. But the data over the weekend's been decidedly more bearish for the market. And so can we suddenly say this is a major change and somehow this is going to be the beginning of a major market rally just because this Monday was different? I find it hard to ascribe a lot of significance to that. Why? Because at the end of the day, we're just one X post or tweet away from the market going the other direction. What was the bullish catalyst over the weekend? Well, it was talking about, okay, maybe the April 2nd tariffs aren't going to be quite as negative, right? They're going to be more measured, more targeted, and so therefore the market rallies today. Well, what happens if tomorrow we get some sort of message coming from the administration that says, well, actually, we're not going to pull it back. We're going to enhance it. The negotiations aren't going well. Obviously, they've opened it for countries to talk, and they can draw down some of their measures, protective measures, so that the tariffs won't be as significant. The problem is we're just one message away from the market going the other direction under the same auspice. But something actually did happen last week that was significant. It's something that you can repeat in your analysis. And I talked about it in my newsletter on Friday. It was a litmus test for the market. And I'm going to show you MAGs. This is MAG 7 companies ETFs up 3.3% today. Now let's get to what happened on Thursday. On Thursday, there was a number of significant option trades. I call them prints, ghost prints. I'm launching my service this Friday on TheoTrade. Super excited about for the next 12 weeks, where we dive into these types of trades. And what happened on Thursday, you saw a significant trade across 5 different MAG 7 companies: Amazon, Apple, Meta, Google. Okay, we have these companies that were seeing big call option activity, and I left Microsoft off the list too. Those 5 companies saw significant option prints on Thursday. What were they doing? They're buying calls, short-dated calls for last Friday's expiration, this Friday's expiration, thousands of contracts. These are not retail traders. These are larger institutions coming into these names on Thursday. Well, what made Friday so significant? Well, the point that I made in my newsletter and the reason why I saw Thursday as being so significant, the depth and the breadth of the trade was substantial. And the idea is if we failed, we're likely heading lower. And if I zoom this chart out, what you'll see is MAG 7 was sitting on the 61% retracement of the bullish trend from August up to December. If we broke support, the expectation would be to pull back to 38.50. If we held in lieu of that activity, we're looking at the MAG 7 companies moving higher. We looked at Apple as an example, saying, hey, we broke a critical level, expecting Apple to likely underperform, as we're expecting Apple probably in the intermediate term to pull back to 195. But the other ones, right? We look at Google, for example, These other stocks significantly outperformed the S&P 500, and you can look at MAGs, again, the ETF, up 3.3% today. And so again, rather than having to do all this like back-tested statistical work, trying to kind of come up with a reason why the market was going up today and why today's gap should be significant, the reality is we should have been looking backward at what happened on Thursday that set all of this up for the market to rally today big time and to see leadership in MAG 7 stocks. Because one thing we know about sell-offs, that buyers are new enters and people that enter the market buying stock, they typically go back to what works. And what's worked over the last 7 years is buying MAG 7 companies. Their market share was 34% of the S&P as recently as the end of 2024. So they've seen it come down. They've underperformed the S&P. All of a sudden, we're seeing a period maybe of outperformance in the very near term. I'm going to go back to the S&P here for just a minute because let's be honest here, okay? If we expect something major out of the market right now based on today's move, we're probably overestimating things. The reality is what we're seeing in the options market, we're seeing them reset hedges. And I'll tell you, we're seeing in the skew index as we're seeing a rise off our lows here of March 13th now to 142. This is historically high. We're seeing hedges being put on as the market rallies. And we'll get today's updated stat here later today. The VIX today getting sold. As we approach 15, we're likely going to see what's going to happen is the term structure of volatility is going to start to rise. We'll see today we've now amped up to about 1.08, meaning what? 3-month VIX is 8% higher than the 30-day VIX. If the VIX pushes towards 15, this is going to push right back up to where we were on February 14th, and we're looking at more downside. And so what happens right now is we can overascribe too much with today's move, thinking we're going to 7,000 instead of maybe the reality is we have a better chance of going 5,100. This is just a short-term rally in the market to rather significant levels. And if I draw a fib retracement from the high here down to the low, typical retracement levels are 38, 50, and 61. We're breaking the 38, which may mean in this rally, we could maybe get to 58.27, maybe 5,900, but it doesn't exactly change the breakdown that we saw. We're only resetting at a high level, resetting our hedges, and looking for the downside. So how do we interpret today? Well, we interpreted on Friday at nearing the close that we're going to get a significant bounce today in MAG 7 companies or this week. So the idea is there was a trading opportunity on Friday going into the close. But what we're looking at in terms of the market generally, this rally may actually give you an opportunity. The opportunity, like February of 2022, is to raise more cash because the realities of the market currently is we may go down before we go up. Let me break this out to 5 years weekly. And what you'll see here, we saw the sell-off, and then we got the rally into March, the end of March right there, and that presented, and also in February, end of January back here, beginning of February, presented an opportunity to raise those cash levels. We may see a similar pullback here or run here into those same levels. Treat it similarly, right? If you don't have more cash, it can create an opportunity to raise cash into strength rather than waiting to hit over the head with volatility. Now, with these short-term moves, and again, one of the themes, one of the main ghost prints that I'm going to talk about on Friday in the TheoTrade chat rooms is about using option activity as a means of identifying opportunities and doubling those efforts sometimes by big short squeezes. So I'm going to show you Bitcoin today. So Bitcoin, we were 5% higher, just shy of 5% on the session. It looks relatively innocuous, right? We're getting a rally. Is this a bear flag? Are we going to break back down again? We've had similar rallies a few times in recent weeks. What we saw today is rather significant. I'm looking at BITO, B-I-T-O. This is an ETF, again, similarly up 5%. It tracks Bitcoin futures. But what we saw today, or what I saw today in the market of BITO options, are significant call option trades, and you can see them down here under option time and sales. Unfortunately, it's reset on me. Whatever. But if we look at it right here, 28 March, you'll see it across the board right here. So I have a scan that I use as part of my Ghost Prince mentorship, but option buying at 20.5, 21, 21.50. Not as much delineation in the 20 here, but definite call option buying. You can see it down here under today's option statistics. Hopefully 61% filled at the ask or above. It's call option buying, folks, which means they're expecting BITO to rise. Well, this is going to track Bitcoin, right? The futures. But then I look downstream at component or stocks that basically mine Bitcoin. What we're seeing today is the outsized move in Mara. So whilst Bitcoin's been kind of shuffling higher, Mara has been going lower, and today an 18% move in Mara. Why? What's so special about Mara? Well, what's special about Mara is 32% of the float is shorted as of the end of February. And what this means is, as we're seeing a lot of call option activity come into the Bitcoin space and in Mara, I'll see if it's showing you down here under time of sales or it's being hidden. It's still here. There was a big option roll today. And now it's dropping to 14.5, whatever. But the idea is we're rolling out from a 12.5 to 13.5 out to a 14.5, 15.5 spread. You can see it right here with that significant option activity. So again, 14.5 and 15.5. And what we're seeing is an expectation that Mara may run. And when you see Mara run and you get a squeeze, this is what happens, right? The gamma squeeze to a short squeeze. This is what creates these furious runs in Mara historically. And you could go back, you can see massive, massive moves in it. As a result, when you get the coincidence of option activity and bullish option activity and high short interest. So this does present an interesting opportunity that the squeeze may be just about to take off. Could we get back to 28? Possibly. Maybe we stop short at 20. Those are still significant potential upside moves in Mara. And if we see more of a squeeze in the shorts right now, or we start to see more high short interest stocks get squeezed by option activity or buyers just coming in, forcing the hand of the shorts to cover, we could see big, big moves. So why not look at these right now as we're expecting a near-term rally in the market to higher levels? Well, folks, that's the video for today.